You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here. I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is Self-Directed IRA expert Scott Maurer. Now, Scott is the Director of Business Development for Advanta IRA. Advanta specializes in administering self-directed IRA and retirement accounts. Scott has worked for Advanta since 2006 and is a frequent speaker and lecturer on the topic of self-directed IRAs and using retirement funds to invest in real estate and other alternative assets. As the business development director, Scott oversees the sales, marketing, and education staff to ensure that new clients receive proper guidance and support when establishing relationships with Advanta. Scott has also worked with numerous individuals and companies to educate them on how self-directed IRAs can be used in their capital raising strategies. Scott is also an attorney and a member of the Florida Bar, although he does not give legal advice to Advanta clients. Now, guys, my goal during our time today with Scott is not only to help you better understand the basics of self-directed IRAs and investing with a self-directed IRA, but more importantly, how we real estate investors can leverage the power of self-directed IRAs when raising capital for deals. Now, in my personal opinion, this really is an overlooked source of capital for all you real estate syndicators out there. I know a lot of you guys are raising money for whether it be mobile home parks or multifamily or other types of investment real estate. A lot of you are doing syndications, and this is an opportunity for you. And so I'll tell you that we have numerous investors in our various mobile home park investments that have leveraged their self-directed IRAs to partner with us on deals. And so I'm not going to try and share with you statistics of how much money is really out there because I'll probably butcher it. So I'm going to let Scott speak to how much actual money is truly out there, just like I said, as an opportunity for you guys. But more importantly, not just statistics, Scott's going to share with us maybe some creative strategies on how we can leverage it and tap into it. So, guys, I'm very excited to get onto this show with Scott. But before we do, here's a quick word from our show sponsor, Sunrise Capital Investors. Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. Now, guys, without further ado, I'd like to welcome Scott Maurer to the show. Scott, how you doing, my friend?
Great, Kevin. How you doing? Thanks for having me back on.
Absolutely. So what I didn't mention in the beginning here is Scott, he's a second-time visitor and guest on the show. And I did look back to see what episode, but it's been a long time, probably 4.5 years since we had Scott on. And so I thought it was only right and also beneficial to bring you back on because things change right over time, especially 4.5 years. Things change in a couple of days, let alone years. And Scott's also local to us as well. And we run a lot of the same circles, although, Scott, I haven't seen you for 4.5 years. So,
like I said, I missed you at the event we had you speak at a few weeks ago. So
yeah. Well, we're looking forward to the show here today with you. And if you could, Scott, I gave a introduction, did a little bit of your bio there, but if there's anything that you might expand on or, anything else that you feel our listeners should know about you and your background, please share.
Again, I've been in the industry since early 2006 here with Advanta IRA, helping people. And self-directed IRAs were new to me when I started in 2006, and I've learned and grown with the business during that time as well. So I think it's important to understand for individuals that just how big at times the self-directed IRA industry is, and not necessarily the self-directed IRA, but the IRA and retirement industry as a whole. There's a lot of opportunity out there, and there's a lot of people who don't know about self-directed IRAs at all. They have a 401k, they have an IRA account, they have it with a bank or a brokerage firm that's offering them limited products and investments, and they simply don't know it's possible. So there's a whole universe of people out there, whether it's someone listening to the show and it's their own IRA, their own 401k they're looking to use, or whether it's somebody who is looking to raise capital. IRAs and 401ks are a hugely untapped resource for capital in this country.
Let's talk about the statistics behind that, just so all the listeners can understand like the sheer scope of the amount of money that's really sitting out there in retirement accounts. What's that number look like, Scott? I'm sure you got it.
Yeah, the most concrete number was from several months ago, but it's, there's currently over $8 trillion in IRA accounts. And that's IRAs alone. I'm not even talking about 401ks. Over $8 trillion in IRAs. And when you lump in 401ks, 403b plans, those retirement accounts that people have through their employers, you're looking at probably $24 to $25 trillion in retirement accounts. And of that number, especially of the IRAs, again, looking at somewhere probably around $8.5 trillion in IRAs, only about 3%, at best estimate, 3 to 4% of that money is being self-directed into the things we can talk about today. So such a huge, again, you're talking about only, a couple $100 billion that's being invested in self-directed IRAs. 95% of people, plus a percent of people who have IRAs who are looking for a place to invest don't even know this is possible. And I don't imagine that 95% of individuals who have IRA accounts are satisfied with what their portfolio is doing, or think that because the fact is they don't know that they have these other options.
Yeah. I mean, why hasn't the word gotten out to more of the masses by this point in time? I mean, that's a staggering number. Only 3 to 4% are actually self-directing the retirement accounts.
Yeah, I mean, Kevin, I get it. We get asked this a lot, especially by people who choose to self-direct and find hey, this is a great experience. Why didn't I know this was available to me sooner? The biggest reason is, again, I think most individuals, a lot of people's IRA accounts start with they work for an employer who offers them a 401k or a 403b or some type of employer-sponsored plan. Those plans are largely held at brokerage firms. It's much easier for someone starting a 401k for their business with 50 or 50,000 employees to have a 401k held with a brokerage firm. It's administratively far easier to do that. So if you have an account with those firms, since they do not allow for self-direction, a Schwab or a Fidelity are good companies if you want to invest in mutual funds or stocks, but they are not going to allow for self-direction. It doesn't fit their business model. So if you have an IRA, you have an old 401k, and you're sitting at one of those firms, they are not going to tell you that you have other investment possibilities. So it takes the impetus of somebody on their own to look and seek out and find these other investment options. I mean, certainly we do our best to try to educate, try to promote what we do. There are a lot of CPAs and attorneys and realtors who are familiar with self-directed IRAs, but the vast majority of the public just isn't looking for it, and they're certainly not going to be told by their current administrator that you don't have to invest in our mutual funds. You could go invest in real estate, whether it's a rental property or a multifamily syndication. They're not advertising it because that means you're going to take your money away from them and move it to another firm like Advanta to make that investment.
Yeah, and as you had mentioned, there's a number of folks probably out there that are in that category that are with one of those conventional firms that they're kind of the lazy investors. Their money's sitting there. They wouldn't know what else to do with it. They haven't really investigated alternative investment opportunities or options. But I think that's where the opportunity lies for guys like us. The real estate investors of the world. Most of the people you probably surround yourself with on a daily basis, whether it's at church or at a social club or playing basketball or at your kid's school, probably have individual retirement accounts, right? That are probably sitting at one of those traditional firms that ultimately don't realize that they have alternate options. And even if they did, they probably wouldn't know what to do with it. And so I think that's where the opportunity really lies. And, Scott, what I'd like to, just for folks that don't really understand what it means to self-direct, let's go into some of the basics and let's talk about your side of the business. What kind of investments can this be used for? I mean, I know there's certain contribution limits and prohibited transactions. I mean, and I don't want to go too deep into the grave here, but I mean, just to understand the basics of what it means to be able to self-direct your retirement account.
Sure. I'll try to keep it pretty high level because it's a fairly easy concept to understand, but you can get lost in the weeds if you go too far down. But self-direction in its very simplest form means that an individual IRA account owner has the freedom to decide what type of an investment they wish to make within their retirement account, rather than being told or limited by their current, their IRA custodian what they can or cannot invest into. Now, the IRS rules, when the IRAs were created in 1975, the IRS said the only things you cannot invest in with your IRA account are life insurance or collectibles. And collectibles would include your antiques, artwork, kind of unique items of that nature. And there's also the restriction that your IRA cannot transact with you and certain disqualified persons. So you cannot use your IRA to buy a primary residence or a vacation home for yourself or to lend money to certain family members. So there's just a few different restrictions that the IRS laid out for IRA accounts. And so these are the things you cannot do. So other than life insurance and collectibles, your IRA can buy a rental property. Your IRA could buy a property to rehab. Your IRA could invest in mobile homes. Your IRA could invest in a real estate syndication. Your IRA could lend money to a third party and they sign over a mortgage or a note to your IRA account. So there's a lot of different things you can do. But again, if you were to go to your current IRA custodian at a brokerage firm and say, hey, I'd like to buy a piece of real estate. There's a rental property in my neighborhood. I want to go buy that property inside my IRA account. They're not going to allow you to do it because they're simply going to say this is not something that we're willing to hold. They're going to require you to take a distribution out of your account, which is taxable to you. But by using a self-directed IRA, you can choose these alternative investments and keep your funds tax protected, because when you use a self-directed IRA account, it is your IRA making this investment. It's not you personally. So the funds are staying underneath that umbrella. So rather than having an account statement that shows you hold 1,000 shares of IBM stock, it's going to show you own 123 Main Street and the value. And then going forward, that income that's being generated is coming back to your IRA and staying tax protected. So it's a way to use that capital inside your IRA to invest in alternative assets that you are choosing, that you are deciding what you want to do.
Got it. Now, how difficult is it, and what does the process look like to switch over from a Fidelity or one of the similar firms out there over to a company like Advanta?
It's very simple, Kevin. It's a matter of paperwork. It's filling out documents to open up an IRA account with us. And then one of the forms in our packet is we call it it's a trustee to trustee transfer form. You tell us who your current custodian is, your account number there, how much you want to move. You don't have to move your entire account. You can move over just what you need. We submit that paperwork to your other brokerage firm, and they then wire the funds into your self-directed IRA account that you've opened with us. In all, it can take anywhere from a few days to a few weeks. It just depends on your other custodian. But it is just a matter of doing some paperwork to get the money moved. And it's something, obviously, we will walk you through and help you, let you know what forms you need to fill out and what you need to do with your current custodian in order to get that money moved over.
Got it. I want to talk about maybe some of the pros and cons of actually buying or investing in real estate. I know a few of them just off the top of my head. Like, for example, a couple of the downsides, and we experience this with our different investors that have invested in our syndication or our mobile home park funds, is they're not able to actually receive the depreciation or the tax advantages of owning the real estate. I know that's a big one. As one of the pros, I know that, capital gains are, obviously tax-free while it's in the IRA. I don't think there's any time limit. I believe there's no time limit for, actually holding of the property, correct? Or being involved in that investment. And I'm sure there's a litany of other pros and cons. Maybe we can run through the list of both, if you would, Scott.
Sure, yeah. And to answer your question, Kevin, there is no time component on how long you need to hold a property within an IRA or hold an investment inside an IRA. And that makes sense if you think about people who do day trading with stocks inside their IRA account. They're buying and selling same day. So obviously there's no time contingent, and that extends to the real estate as well. But yeah, you mentioned it's certainly one of the cons that we definitely, when we talk to CPAs and tax advisors, as I mentioned a minute ago, if your IRA owns real estate, the huge benefit is that the income that is generated, the rental income each month, the profits on a sale, that all is coming back to your IRA with no tax consequence to you. The con side of that is that the IRS says, well, if we're not going to pay tax on the income, so your IRA as its own legal entity is not paying tax on the income, your IRA cannot take, or you cannot take, any of the depreciation on that property as well. So when talking with CPAs and tax advisors, a lot of times that's a negative when it comes to investing in real estate with your IRA. Again, the benefit is, the gains you're going to have within that IRA are going to be tax deferred or tax free back to your IRA. We really look at one of the pros of, I think, in our clients that agree with us, the pros of investing in real estate in an IRA. They're not always looking at it from a tax perspective. If you have money in an IRA, if I have, say, $200,000 or let's say $250,000, $250,000 in my IRA account, that money needs to be invested somewhere. I could let it sit in a bank in a CD at less than 2%. I could put it in the stock market and be subject to market forces. Up really high one week, down really far the next week. Our clients look at it as more of this money has to be invested somewhere, even though I'm not going to get depreciation and other types of deductions. That type of investment, real estate, it's a hard asset within the account. It's tangible. Most people, I think, would agree real estate's not going to go to a zero value if you buy it. Even if you bought a property slightly maybe a little bit above market value when you paid for it, if you're cash flowing it on a monthly basis, that's kind of the key component. You're not going to look to sell it anyway for 5, 10, 15 years from now anyway. So our clients like the fact that real estate it's tangible. It's something they can see, they can control their tenants, a lot more control within that type of retirement account than when you put it in the stock market. I mean, obviously you can choose your stocks and mutual funds, but nobody has a glass ball to really know which stocks to pick and when to sell them.
Yep. Got it. I know there's some limitations that exist, Scott, as far as like, let's use an example of not necessarily investing into a syndication, but let's say that you wanted to buy a piece of real estate. You wanted to fix and flip a property. You wanted to do it inside your IRA. Or actually, you can use that example, or you just want to buy a single family home and ultimately you decide you want to manage that property yourself. There's some restrictions as far as the involvement that you can have as the, owner of that IRA account, correct? In that individual property.
Yeah, there are. And there's, as I mentioned, the important thing to look and remember is that your IRA account is its own separate legal entity. So your IRA as a legal entity is prohibited with transacting with certain individuals. And that includes yourself and your spouse, your parents and grandparents, your children and grandchildren. So your IRA cannot pay any of those individuals for work. Your IRA cannot buy or sell assets to or from those individuals. Additionally, those individuals are not supposed to provide any benefit or services to the IRA account. So if your IRA is going to as you mentioned, buy a property to fix and flip, and it needs new painting, needs new carpet. If it's your IRA account, you cannot do the work. Your IRA does need to pay a third party to actually do that work. Now, one kind of an advantage, we look at the property management a little bit differently. If you are, for instance, again, flipping a property, you mentioned even a rental where you need some ongoing maintenance, we think it's acceptable for you to choose your contractors, decide what work needs to be done. If you have tenants, selecting your tenants, but you do need to make sure, though, that all of the expenses related to that property that is being paid to those third parties comes out of the IRA, and then make sure also that your tenants are sending their rents into your IRA account. You should not be handling that money personally.
Got it.
And you certainly should not be taking any kind of commission or property management fee for doing so.
Got it. What kind of fees are associated with managing an account with a company like Advanta? Like, is there an ongoing annual fee? Also, I'm assuming probably a setup or onboarding fee as well.
Yeah, we have a setup fee. It's $50 to get the account opened. If you're buying and making when you go to make an investment inside the IRA, obviously anyone who's ever purchased real estate or even is invested in a private placement or syndication knows there's a lot more paperwork that's involved than just simply buying a mutual fund. So we have a $50 setup fee. There's a $95 or $145 fee to actually buy the asset and go through that paperwork. That includes for a whole real estate closing if you're buying real estate. And then on an annual basis, you're looking at a flat $295 a year for us to do all the record keeping associated with that asset inside your account. So around $200 or so to get the account opened and get your asset purchased. And then a flat $295 a year for us to do all the record keeping going forward for that property.
Got it. And I know there's lots of other self-directed administrators out there. Talk to me about Advanta as a company, and what are some of the advantages of working with a group like yours, Scott?
Yeah, I think one thing we focused on a couple of years ago that we switched up a little bit how we did things here at Advanta is we went to really a concierge type system, but really we call it our account manager system, where every new account that we get at Advanta is assigned to one particular account manager. That's one person whose name you'll get to know, whose phone number you have, whose email you have, to contact them directly for any questions you have regarding your account. There are other custodians where you call an 800 number and you're going to get the next person that answers the phone. With Advanta, we put you and all of if you refer people to us, all with that same account manager to give really that continuity, makes things much easier for you. You don't have to explain yourself each time you call in, dealing with that one particular person. So the account manager system, I think, is one huge benefit. The other benefit we try to provide to our clients and honestly just other investors in general is we put on a lot of educational events. We do live seminars at our offices in Atlanta and Tampa, and we do a lot of web-based trainings as well, free webinars. The lunch and learns are free as well. So we try to provide as much information as possible on not only self-directed IRAs, but all those topics related to self-directed IRAs. So we've brought on attorneys, mortgage brokers, et cetera, to talk about investing in real estate and their various areas of expertise as well. So our education and really our customer service is what we focus on.
Got it. And so you said you have locations in Florida and Georgia. Does one need to be based in either one of those states to work with you, or does it make a difference?
They do not. No, I mean, our physical location, we again in the Tampa Bay area and then also in Atlanta, but we have clients in California, New York. I think we even had someone open up an account from Hawaii last year and in Alaska. So all over the United States, that we are not geographically bound on who we can work with.
Got it. Fantastic. And should we talk about checkbook controlled IRAs? Scott, do you think that's a relevant topic to touch on?
I could touch on it briefly since you mentioned it, Kevin. The term checkbook control, as I mentioned when we were talking about a minute ago, buying a property, Advanta as the administrator typically will receive in the rents and pay the bills at the direction of the client, the IRA owner, telling us what checks to deposit, then what bills to pay. If you're someone who really wants that level of control yourself, where you can process the rents, you can pay the bills, again, you're not taking a commission for it, you're not being paid for it. There is a mechanism by utilizing an LLC where your IRA can invest through an LLC to give you checkbook control, where the monies in your IRA account are at your disposal through an LLC entity. Mm-hmm. So you can buy assets, you can make investments through the LLC, and then you keep track of the checkbook. So it's a strategy for people who are looking to buy multiple assets, who want even greater degree of control, and have that checkbook at their fingertips. With that responsibility, though, with that control, obviously comes a great responsibility as well to make sure you're following the rules. But for someone looking at greater degree of control, that's an option, but it's up to each individual.
Got it. Okay. Thank you for that. Now, let's talk about us investors, us real estate investors that ultimately are looking to raise capital. Everything's exciting about self-directed retirement accounts. But I think one of the big challenges that real estate investors face, whether you're new or actually experienced, if you've never gone out and raised private capital before, it can be a very daunting process. And if you don't have that immediate high net worth network of folks that are looking to throw money at your deals, then you might not know where to start. And I think that retirement accounts are very much overlooked as a source of capital for whether it's a deal-specific investment or a syndication or a fund like what we do. And so maybe let's talk about that a little bit, Scott. And more specifically, ideas that you might have on how the listeners can track down, get introductions with folks that have retirement money that ultimately might be looking to place it in a good investment.
Sure. I think that's important to understand that. And I can obviously, speaking from my knowledge base here at Advanta, the types of clients that we have at Advanta, I think, really fall into two buckets for the most part. You have people who are somewhat entrepreneurial in spirit, but people who really are going to, they might listen to the podcast and say, you know what, that's for me. I'm going to go out and find my own property. I'm going to find my own tenants. I'm going to find my own deals. And that's really their mindset. And they're going out. They're not looking for other people's funds. And we have another large segment of our clients, so the other half, are people who are more passive investors. They've been they've been pitched to on a deal, or they know somebody who's making an investment and said, that sounds like a really good deal. It sounds like a really good project that you're starting. I'd like to do that. I'd like to be part of that investment, but I don't necessarily have the funds in my savings account to make that investment, or I'm not sure where I would gather that $25,000, $50,000, $100,000 that you need for the investment. And that person has been, introduced to a self-directed IRA as a way to make that investment. So again, I think self-directed investors, you have people who are really go-getters on their own, for their own accounts, not worried about other people. Then you have another large segment of people who are being introduced to it, largely by a CPA, but more so the investment providers, the people who are raising capital, making them aware of, hey, if you like my deal, here's a number of different ways that you can invest. And if you use the IRA account, you're not going to have any tax consequence whatsoever for using those funds. Because again, as we said at the top, 95% of people are not self-directing. And it's because most of them don't know that it's possible. So for us, really, and people who are raising capital, it's simply making folks aware that they have this as an option when they're looking to invest with you. It's not that you have to sell them that self-directed IRAs are the only way or the best way to invest, but it's simply saying, here's another way that you can invest with us. Because most people, again, if I have $50,000 in my savings account, that might be my rainy day fund. That if something were to happen to my health or to my employment and I need that money right away. I can't tie that up in a private placement for the next 5 to 7 years. But my IRA or my old 401k, I wasn't planning on touching that money anyway. So I got to retirement, which is still 20 years away. I'm happy to put that money into an investment that's going to yield hopefully better than what the stock market's getting. And obviously, depending on the deal that they're looking at, there's a great opportunity. They'll want to jump on it. And that their IRA is where those funds are at that they're willing to typically use. Is
there an opportunity, I'm just thinking like out of the box strategies, the real estate that one would buy with their IRA, it's going to be owned within that IRA. Could one simply go to the county tax records and actually search for properties that are owned by, if it's owned by Advanta IRA, I mean, they could search Advanta probably and filter out every single property that ultimately has the word Advanta in it, which is probably one of your clients. Is that an option for folks?
You could. It's going to depend. The only thing I would caution individuals there is depending on the county that you search, the full wording, if someone's looking to buy a piece of real estate with their IRA, it'd be Advanta IRA for benefit of Joe Smith's IRA account. That's the legal wording on there. Some of the counties, when they index the property, may just list Advanta IRA and don't include that FBO Joe Smith's IRA, but some of them certainly do. So if you're looking for properties owned by IRA individuals or possibly looking for them, certainly the county tax records are going to show that. That's public record that someone could go in and certainly search for.
Got it. Okay, fantastic. Scott, is there anything else that we might have missed that you feel would be relevant for our listeners to know as it relates to self-directed retirement accounts?
I think on the raising capital front, especially, one of the things we want to try to do for individuals who are raising capital now, One thing we can't do, we can never vouch for a deal. I can't pitch a deal that somebody has to our clients or to our investors. And I can't, if somebody's calling us and said, hey, I'm looking at investing with Joe, what do you think of the deal? I can't vouch and say, yes, that deal is a good one. But what we can try to do is provide someone who's raising capital with tools to reach people with self-directed IRAs. We've done private landing pages that we host on our site. It's not something you can navigate to directly from our site, but it's a link that you could provide on your own website. If you're looking to raise capital, hey, how did you know you could use an IRA account to invest with us? Click here, and it takes it to the page that we created for you. We include your logo, your contact information. We can also create a PDF flyer very similar to the landing page with your logo, your information, what the steps are to self-direct. Again, to try to help you spread the word to your investors. Again, just as another way of investing, but trying to provide that material. And then once you actually get somebody who's interested, our account manager system and our educational process is really trying to make that person feel much more comfortable about the investment. The last thing we want to do at Advanta is if you've worked hard to secure an investor who's going to loan you $50, $100, $200,000 for your project, is to put up any barriers or any speed bumps that make that person start second guessing the investment. Because again, you're going to find people who are not quite sure of the investment. I've never heard of self-directed before. Are you sure this is legal? Are you sure this is possible? We want to make them feel comfortable and say, yes, indeed it is. This is how the process is going to work. Getting your funds transferred, getting your money invested, and then delivering on that promise. Because if we put speed bumps in the way, they're going to start going back to you and asking you, this doesn't seem right to me, and they might exit the investment. So that's what we try to do, providing you a landing page, providing you collateral material, providing you education so that you can educate your clients. And obviously we can, it's a win-win situation for us. If we can open up an account, have someone that invests with you, that's a win for us. Obviously that's a win for you as well. And it's really nothing you need to know more if you're raising capital than that this is an option. If you have an IRA, if somebody has an old 401k account, those are funds that could be used. If you're interested, I can put you in touch with somebody that explains that in a little more detail.
Yeah, well, fantastic. Scott, this has been a lot of fun. I really appreciate you coming to the show. Lots of great information as always. And I'd like to enter in what I like to call the Golden Nugget segment. And again, you've already shared lots of golden nuggets thus far in the show here today. But if you had one final golden nugget of advice or wisdom that you could leave with our listeners that may motivate and inspire them as they progress in their real estate investing career, what would that one last golden nugget be?
I think the biggest golden nugget is that there are so many individuals out there who have such a great deal of knowledge, including yourself, Kevin, that go out and get educated about what you're looking at investing. And you don't have to pay $10,000, $15,000, $20,000 for that education. There are individuals, there are local investor groups that you can go to and meet other people who've been there and done that, and we'll be happy to give you that advice free of charge. So my gold nugget is don't spend thousands of dollars on CDs and books and whatnot. Just go talk to individuals at networking events, seek them out. Some of them do classes. They charge a couple $100 on a weekend to get educated about what you're looking to do real estate wise. Again, we provide all our education free. That's part of what we believe in. And you'll find there's a lot of other people that do the same thing. So be educated, know what you're getting involved in, and do all your due diligence is really my nugget of advice. Yeah, no, that's fantastic. And Scott, I think we're dating ourselves when we start talking about CDs. I didn't even think about that. Yeah. Flash drives. I'm there. I'm there as well. So no, that's all right. Well, Scott, this has been an absolute pleasure as always. And folks, to learn more about Scott and his company, you can visit him at AdvantaIRA.com. Again, that's AdvantaIRA.com. I'll put that in the show notes as well. And Scott, that's all we have, my friend. As always, a pleasure. Look forward to staying in touch with you. And until we talk again, you be well, my friend. Yeah, appreciate it, Kevin. Thank you.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.